Data by the National Bureau of Statistics shows that foreign portfolio investments rose by 71.79% to $899.31 million in the third quarter of this year, ranking top in the list of capital importation. How much value did this add to the Nigerian equities market? Timilehin Junaid, research analyst at Norrenberger Securities, joins me for this discussion. Timilehin, thank you for joining us today.
Thank you, Esther. Good afternoon. Good afternoon, viewers.
Good afternoon. Let's get right to it. Let's have your initial reaction to the data, especially looking at the portfolio investments component.
Thank you, Esther. So the data that has been released by the Nigerian Bureau of Statistics for the third quarter of this year, particularly for us who play in the equity market space, is not anything surprising. And why did I say that? It's because that has been the trend year on year. If you look at the 2022 report, you will find out that these guys come in pretty much early into the year, and then you have a flight to safety later on in the later part of the year, and that has been a consistent trend for us. So for me, when I saw the data, it wasn't anything out of place particularly. But one thing that has fundamentally stood out for me this year is that we've seen a huge inflow, right, of capital importation into this market on the backdrop of FX liberalization and, of course, the key reforms that has been done by this present government. So if you look at it year on year and you look at the macros, yes, the capital importation has grown really, really large, but talking about the trend, as in what you see in the equities market, it is not anything different from what we've seen over the years.
So no impact on the stock market?
Of course there is, right? Because when we started this year, earlier, if you would agree with me, we started this year on a really good note, right? Because as at May of this year, the FPI inflow had peaked to about 54.87 billion. And what that meant was that for the all-share index, it broke all the levels of what we had found last year, closing at 77 to a peak of 99,300 basis points. And what that meant was that the foreign investment sentiment across our market did improve, right, from January up until May. And this, of course, made a lot of sense. But again, right, just like the last speaker spoke about, you know that most of the capital that come in through the FPI, it's not so patient as much as the FDI. What that means is that by the time we left May into the other half of the year, we saw that the net outflows from sharp contraction in foreign transaction kept increasing, which of course impacted our market. And then you saw that there was a downward pressure on the ASI index. Of course, it has remained resilient because of the activities of the domestic players, which continue to offer the effect of transaction.
Right. Let's talk about the Naira. We've seen, I mean, it's in the news, the Naira appreciating significantly at the official market. Is the stock market paying any attention to this development?
Oh, yes, fantastic, right? Because one thing that you find about the stock market is usually the indicator of the overall economy, right? So when you come into the stock market, what you see again and again is the stock market of an economy can tell you what the investors generally perceive about the overall macros. And the fact that the central bank have now mandated that all FX players now use the Bloomberg B-match trading system, what that means for us is there's a whole lot more transparency in the currency market, which of course would flow down into the equities market. And then as more and more price discovery happens, we expect that one, the valuation of most of these companies become a little bit more fair and cheaper, right, than what you would find when it was much more expensive to get the Naira. So it's a good step in the right direction for us, honestly.
Right. Let's talk about trading for this week. First trading day for the week. We're moving further into the festive season. I've been asking other market watchers what they expect in terms of trading patterns for the few weeks remaining for this month. There's been talk about profit taking. There's been talk about perhaps a Santa Claus rally. I haven't seen that. But let's hear your thoughts on how you see the market proceeding for the last couple of weeks.
All right. So on if you see the data that has been released by the NGX, right, you find out that in the equities market space, we have majorly two players. We have the domestic institutional players, and then we have the retail investors. Of course, there's a lot of profit taking both by the institutional and retail. But one of the things you find that is very, very significant about this period is the fact that you find a lot of institutional players beginning to take advantage of periods like this, to position themselves for the rally that ordinarily you would expect in the first quarter of next year. Because again, if you look at the data, usually the first quarter of every year, the all share index has always done very, very well. So you find out that a lot of institutional players would focus more now, seeing how they can begin to, position into the market. We've seen uptick in banking stocks like Jais, the like of Jais, and some of the insurance companies too. We've seen increased trading activity, which of course is on the backdrop of the institutional players who consistently try to create an avenue for them to enter at a really, really fair zone, right? But for the retail investors, many of them are beginning to close their books for the year, take their profit, and then look at the new year with renewed focus and interest. So basically, it's a mixed flow. And because we know that institutional investors, domestic institutional investors, have played a really, really big role in this market, what that means for us, therefore, is that you find out that there's sustained momentum in the market, and a lot of profit-taking activities by the retail investors might not exactly be felt by the market as the other institutional players begins to take advantage of fair valuations.
Okay, interesting. Well, we'll leave it there. Thank you so much, Timilehin, for speaking to us today. We appreciate your time and perspective. Timilehin Junaid, research analyst at Norrenberger Securities.